Hey guys, this week we'll dive into some strategies on how partners at law firms can smoothen out their income when dealing with quarterly estimated tax payments. So in my video last week, I mentioned as a partner at a law firm, you're now considered a self-employed individual in the eyes of the IRS. So it's your responsibility to make your quarterly estimated tax payments. But the problem is by the time you reach the partnership ranks, your income is likely in the multiple six-figure range. So those quarterly payments could be quite large. And without proper planning, they could become a burden on your budget and potentially put you in a tight financial position when it comes time to make that payment. So I have 4 tips to help you minimize the risk of underpayment, as well as help smoothen out your income. So tip number 1, open a savings account and earmark it for taxes. We're all guilty of this, right? We see money in our checking account and we think that's ours. That's natural. But when no taxes are withheld from your paychecks, technically some of that money is not yours. It's the IRS's. So by earmarking the money in a separate account, it ensures that that money is not spent for something else. Tip number 2, start funneling money to that account that is earmarked for taxes. So to ensure that you have enough money when comes the time to make your payment, I would suggest to start funneling a portion of your paycheck, each time you receive a paycheck, either your guaranteed payments for your services as a partner or your profit distributions or even your bonus. Talk to your accountant or your tax preparer and to figure out a good percentage to send to that account each time you receive money. So that's tip number 2. Tip number 3 is to pay your taxes on time each quarter. So the IRS wants us as taxpayers to pay our taxes as we receive income. And if you don't do that, if you don't pay it on time, then you're subject to underpayment penalties, which is also subject to interest. You should set a reminder in your calendar each quarter to submit your payment to the IRS. The IRS will also allow you to set automatic payments. So if you already have like a set amount that you want to send each quarter, you can set it automatically so you don't have to worry about doing it manually. Tip number 4 is to build a buffer in your savings leading up to becoming a partner. So if you're about to make partner, I would suggest that you start putting away some money in a savings account to prepare for that first quarterly tax payment. Because ideally you would want to have enough to cover that first payment. And that way you're always going to be ahead and you'll never have to worry about whether you'll have enough money to pay that payment. That's all I got for today. I feel like I barely scratched the surface on how to plan around quarterly tax payments. But again, I'll stop here. So if you like this content, just go ahead and connect with me on LinkedIn or follow me on LinkedIn. Subscribe to my newsletter as well. But I'll catch you next time. Thanks for watching.